But this form here, this is where the biggest financial mistake happens for most people, okay? So what happens here is, do anybody know what this form is right here? This is called the W-4, okay? Everybody gets one of these when you fill out a job and you went to fill out the application, all that stuff, and got a job. You went to orientation, and they gave you one of these things. I remember the first time I got one, I said, what do I put on here? Anybody remember that? And they said, well, if you got, how many kids you got? I said, none. They say, put 0. Anybody heard them say that? You got two kids, put 2. Well, you married? Yeah, you married. Okay, so how many kids you got? 2. Well, you take 1 and the husband take 1. Anybody heard all that stuff? All that's wrong. If you don't want to owe, put 0. Anybody ever heard that? All that is wrong. So let's talk about it. Remember, 80% of the people in this country get a tax deduction. I mean, not tax deduction, but a tax refund. So that means that they overpay taxes. Now, here's what we got to do. Now, I've had people that were tax people that had people doing this here. They would say, okay, head of household and all this other stuff. So let's go to head of household so we know what head of household means. Generally, you can claim head of household filing status on your tax return only if you are unmarried. I have people that are married saying, well, I make more money, so I'm head of household. I hear people say, I'm the husband, so I'm the head of household. And you have tax people letting them do this. That's wrong. You get caught doing that, you get the problem. You're going to have a problem. Okay? So, only if you are unmarried and pay more than 50% of the cost of keeping up the home for yourself and your dependents or other qualifying individuals. See publication 501. So, okay. Now, first, the second thing you want to understand here is people think, well, if I change this form, I'm going to get in trouble. The IRS is going to mess me up. Okay? Well, it says right here at the top, purpose. Now, I was just talking to this young man here. He said when he got his W-4, what they do? They didn't give you this part. They just gave you the bottom half. That's what happens most times. They give you the bottom little thing here and say, fill this out. See, you got the blind leading the blind. The person at HR don't know anything about this. And what's happening is when you ask them, what do you put on this form? You're asking a very serious business question to a person that's not a business person. Does that make sense? So now let's talk about it. Purpose. Complete the form W-4 so that your employer can withhold the correct amount of federal income tax from your pay. Consider completing a new W-4 form each year and when your personal or financial situation changes. When a person joins business with us, guess what happened? Their financial situation changed. I know people that's been on the job 20 years and haven't seen this form since then. They got married and got divorced and bought a house, did all kind of stuff, and never changed this form. This is why they get big refunds, because they overpay. Now, let's go down here. Manola, I want you to do me a favor right here. Bring A here all the way up to the top. Okay. Now, let's take a look at this. This is an example that I'm going to do. This is a woman making $50,000 a year, and she has 2 children. $50,000 a year, 2 children. Now, most people would take the position, well, I got 2 children, I just put 2 and turn it in. But let's look at this. It says, enter 1 for yourself as no one else can claim you as a dependent. So should you ever have 0? See, somebody told you don't want to owe, put 0, that was wrong. So right here, we got 1. So okay, I'm going to do this. A, B, C, D, E, F, G, H. Okay. We got 1 here. B, if you are single and have only 1 job, this person is single and only have 1 job, they got 1. So should they ever have 0? And a 1 for your spouse. They don't have a spouse. D. Okay. Enter number of dependents. Now it's asking you about what? Your children. We got 2. These children are fairly older children. It says enter 1 if you're going to file head of household. Okay. So she is going to file head of household because she is unmarried and paying more than 50% of the upkeep. So she got 1 here. So we got 1, 2, 3, 4, 5. She does not have 5 children. See, people think, well, they're talking about dependents on that form. No, it's allowances. These are allowances, not dependents. Okay? We only talk about dependents right here. But we still are not done. Let's go to F. Enter 1 if you have at least $2,000 of child-dependent care expenses. That's things like daycare. But since these are a little bit older, we're going to say she doesn't have that. So we got 0. G. Child tax credit. How do you find out? It says, okay, if your total income is less than $65,000, 95 if you're married, enter 2 for each eligible child. We got 2 eligible children, so we got what? Bam. Now it says add these up. 1, 2, 4, 5, 9. This person's supposed to have 9 without a home-based business. And they had 2. That's why they get a $3,000, $4,000, $5,000 refund. Got it? But see, now let's talk about adding the home-based business. Okay, let's go to the next page, Manola. Okay, let's just bring this up just a little bit here so I can see the top here. Okay, now the government don't even want you to be precise about this. They say enter what? An estimate. An estimate of your 2014 itemized deductions. These include qualifying home mortgage interest, charitable contributions, and state and local taxes. So let's say this woman has roughly about $15,000 between all those things here. She's got a mortgage and stuff and state and local tax, all that, so got about $15,000. Okay? Now, it says you've got medical expenses in excess of 10% of your income. Now, if you got medical expenses that high, you're almost dead, so you probably don't qualify for that. But now it says, okay, number 2, enter your filing status. The first side is for what is called standard filers. That's how you pick up your allowances there. But the second side is for itemized filers. So you pick up the difference on the back side. Make sense? Now, here we got, okay, our filing status. We file in the head of household. We got 9,100. Let's make it 9,000 to round real easy here. Okay, so we got what? $6,000 difference. Okay? Now, it says subtract 2 from 1. That's what I just did. It says, okay, number 4, enter an estimate of your 2014 adjustments to income. Tax deductions are what? Adjustments to income. Uh-oh. Now we're getting ready to put the home-based business on the W-4. So based on that scenario, we calculated out that we was going to have about $5,000 in income. We had $20,000 in tax deductions. So we would have $15,000 from this projected Schedule C here. Now it says, okay, add lines 3 and 4 together. So I got $21,000 here. Line 6, enter an estimate of your 2014 non-wage income. Well, that's stuff like dividends and stuff like that. Most people don't have any of those, Preston. So we don't have anything there. So it's 0. Line 7. Subtract line 6 from 5. It's nothing to subtract. So it's 21,000. Now look at this now. Look at this now. Look at this. Don't miss this. Don't miss this. You get ready to watch it. Divide line 7 by 3950. Okay, so let me get my calculator. 21,000 divided by 3950, we come up with what? 5.31. So now it says drop the fraction. 5. The home-based business allowed us 5 new allowances instantly. Instantly. Add them together. I could legally put 14 on my W-4 and turn it into HR the next day. And on my next paycheck, I'm going to have instant $2, $3, $4, $5, $6, $7, $8, $900 per month back into my check. Now we got cash flow. See, we changed the cash flow situation instantly. Now we ain't got to do this thing that we play that game. Woo, I claimed 9 for 6 months and 0 the next 6 months. That's what you hear me doing, all that little crazy stuff. Or when I get ready to get my bonus, I take it on up to 10, and I take it on back down. all that craziness. No, just do it like this.